I'm here with Christian Saving, the CEO of Deutsche Bank at the Tag der Deutschen Industrie. I think that's the name of the conference.
Sure.
And one of the themes here has been, how does business change post-COVID? In Europe, in banking, we've heard about a need for borders, especially mergers, especially cross-border mergers, for years. But it doesn't seem like we've seen much impetus until now. There have been a lot more deals done, admittedly mostly in their own national home markets, but still more deals being done and more deals being talked about. Do you think COVID produces more consolidation?
I think you phrased it right. We see actually an increasing domestic deals, not yet cross-border, because things like capital market union, banking union is kind of still progressing, not there where it should be before you come to these deals. And yes, COVID for sure accelerated certain developments also in the banking industry. Scale is an issue. We always said in retail banking, scale is in particular an issue. Therefore, we decided to fully integrate Postbank 2 or 3 years ago, where we are well underway. And that's happening in other countries too, but it's domestic so far. Consolidation will come in Europe, but cross-border, I would say, still needs some time.
CEOs, every time I talk to a bank CEO, they tell me banking union just isn't there yet. They're not ready at the European Union level. But whenever I talk to EU leaders, they always say CEOs are free to do cross-border deals. Which shoe has to drop first?
Well, both are right? I mean, yes, we are free to do cross-border deals, but if the regulatory headwind and also certain restrictions are still there, that, for instance, the kind of free float of liquidity or capital is not there to a degree which really makes such a merger reasonable and constructive, then obviously something still needs to happen. So I think we need to wait for further developments, but I also know that regulators, that also governance well understand this issue. I'm confident that we will see progress on the banking union side, on the capital markets union side. I know that the German finance minister is working hard on this, so that will come, but for the time being, my view is that you rather see more domestic mergers before cross-border mergers are happening.
And of course, you've got enough on your plate already. You've got the most audacious transformation plan the bank has seen, Deutsche Bank has seen in decades. Does that mean you rule out for now any acquisitions?
Look, the focus of Deutsche Bank is clearly to finalize the transformation. I'm more than focused on this one. I would even say that we are laser focused on this one. And the success over the last 15 months, I think, prove our point that this transformation was and is the right one for the bank. And therefore, this has top priority, and there my full management attention is on.
But what does that mean exactly? I mean, when is this transformation going to be at a point when you can finally start to consider some bigger deals?
Well, first of all, we always said that 2019 and 2020 are the kind of the key years, or the 6 hot quarters, the second half of 2019 and the full year 2020, where we really have to focus full on transformation. Look, after the end of the second quarter, we had 75% of our transformation cost already booked, and we made good progress in Q3. So in this regard, 2019 and 2020 is the key of the transformation. Of course, with certain items still to come in 21, our key financial targets we have announced for the end of the year 2022. So it is a 3 to 4 year transformation. The first 2 years are key. So far, we have been very successful with that, and hence this management focus needs to continue.
When you look beyond that and you hear, reports in the financial boulevard press about Axel Weber's, dream mergers, do you think it's possible that Deutsche Bank could do a big deal, could be part of a big deal?
Again, I think in general, consolidation must happen in Europe. We need to be competitive also with the US banks, also from a size point of view. Look what they can invest and what they are investing into technology. You need a certain size for that, and therefore the general theme of consolidation is something which Europe will see. For us, it's important that we are not a junior partner to such thoughts. And that means that we first have to sustainably increase our profitability. We started well, but we knew it's a 3 to 4 year race that we have to embark on. We are in the middle of that one. And therefore, let's focus on this one. Let's finalize this transformation. And when the profitability is going up, in particular the return on equity, and again, we're on the right way, but we have to do still a lot. Then I do think that also the market capitalization of Deutsche Bank looks differently. And obviously, then also for a potential discussion on a merger, we then have a different position and a better position.
Let's talk about the path that you're on then. You strike me as being in a fairly upbeat mood. You strike me as fairly optimistic. How has the third quarter been at Deutsche Bank?
Well, we announced the numbers in, I think, 3 weeks' time. But overall, I'm very satisfied with the momentum which we have seen in Q3. Of course, certain market volatility started to normalize in Q3, but nevertheless, the momentum which we have seen in Q1 and Q2 kind of continued into Q3. Therefore, I think we will show a good performance, in particular in the investment bank. The nice thing about this performance is, though, that it confirms our strategy, because I believe that with the client engagement we have seen, also in Q3, also year over year, I'm confident that we can also see sustainability of future revenues, because clients are coming back, the engagement is higher, and they're doing business in those areas where we said this is core to Deutsche Bank, and that makes me actually happy.
So what does then the trading picture look like? If you were to draw a graph for me, in Q3 into Q4, how does that momentum carry on?
Well, I think in Q3 and Q4, again, we won't see this kind of volatility which we have seen in Q1 and Q2, which was on the one hand positive, but also in the credit business, you also had the one or the other months which was far more difficult. So it's not only positive, it also kind of hurts you. I would say that we still see some volatility given the uncertainties in the market. Everybody is focusing on COVID, but we have the US elections. We have the Brexit question. We have major geopolitical questions to be answered. And therefore, I do think that also like in Q3, which is now over, but also in Q4, we still see volatility. But the most important is that the underlying interaction and engagement with clients is going well. And that's what we can see.
Let's talk about how that engagement with clients worked during the times of COVID. You had a lot of your key players, a lot of your, rank and file working from home. Did that impress you? Did you think that they were able to remain productive?
For sure, I'm impressed. I'm though sure that almost all CEOs are telling you that work from home and also the whole interaction during the key months of lockdowns, April, May, June, worked really well. And I'm impressed, and I really deeply appreciate the performance of our people during these months. So that went well. Also the interactions with clients. Today at the day of the industry here in Germany, I mean, my interaction again with our key clients show that not only Deutsche Bank is clearly back on the forefront with these clients, but also they are very impressed how reactive we were, how fast we could react and respond to their questions. That's what we need to maintain, though I'm also a big believer that while it is good to see that work from home works, I also welcome and hope that more people return to the office, because at the end of the day, generation of new ideas, collaboration, cooperation works best if people are in the office, and therefore our plan is also to bring people back.
Do you expect, though, a significant change from now on? I mean, are your bankers going to be coming to the office 3 or 4 days a week and spending a few days more a week at home with family?
Too early to judge, to be honest. Obviously, it's a huge topic. I do see that we will never come back to the kind of the environment which we have seen pre-COVID. I do think that we, at least at Deutsche Bank, we will end up in a certain hybrid model. But yes, that we will see obviously bankers returning to the bank, to the office, but that we have a more flexible approach because it proved to be working okay. And I do believe that also for some, it always depends on the underlying division the people work in, but for some, that commuted time and so on felt away, actually made the bank in this regard more efficient. In other areas, you need the exchange, the interaction of people, and therefore these people can't wait to come back. It really depends on the division, but overall, I would say Deutsche Bank will go for a hybrid model.
One of the reasons that it's exciting for investors, I think, is not just because, you know, nobody ever has to put on pants again and you get to see your kids running around, but because real estate costs so much, right? You pay so much, such a high cost for all of your office space, and travel costs must be a huge chunk of your budget every year. Do you see those costs coming down more than you previously had thought?
Yes. Clearly, COVID has shown us that there are cost reduction opportunities, which, to be fair, we didn't have in mind to such a scale like we are now thinking about. But I would also caution that the first initial reaction after 6 or 8 weeks, that we can reduce real estate by X or double digit or really massive amounts, is also wrong. We need the people also in the bank, again, for collaboration, idea generation. In particular, the young people want to come back. We have graduates now coming into the bank. They need to learn, they need to talk, they need senior people training them, educating them. And therefore, I do believe the truth is in the middle, but for sure, real estate, but also travel, will provide us with incremental cost-cutting ideas.
So, I mean, I assume you're a Senators Club member or whatever honor system the airlines have, right? Is that travel budget going to be reduced for everyone? Or are we going to get back to the...
Let me put it this way. I think for the overall bank, the travel budget will be reduced, because we have all seen, also our clients, by the way, that video conferences work. It's not fit for purpose for each and every client engagement. And I have been on the road again since 6-8 weeks, because personal contact is important. But I'm absolutely sure that the number of travel costs, or also real estate costs, but in particular travel costs, which we have seen pre-COVID, we won't see again at Deutsche Bank.
What about headcount levels? You know, most banks around the world had kind of paused headcount reductions into the crisis, and many have lifted, have gone back now to their previous plans. Are you able still to meet your targets on that basis?
So did we. I think for the right reasons, we paused the reduction in April and May at the kind of heat of the crisis, because also for moral points, I never wanted to have these kind of discussions via video. Nevertheless, at the end of the day, we also need to see what the environment is all about, and that we need to adjust. We have a clear plan up to 2022. And I'm confident that we achieve that.
Is that going to cost more, though, now that people are maybe more hesitant to get back in the job market? Will you have to offer higher severance packages, for example?
For sure, we see now a different attrition ratio. But, you know, I also have to admit that the different attrition ratio is not only because of COVID, but also because of the change of the mood within Deutsche Bank. We did a staff survey earlier this year, or in May or in June. We never had a higher commitment and enablement level like shown in May and in June. People actually see that the bank is on the right path and like to stay. So at the end of the day, we stick to our numbers. That also means that we need to think about additional ideas, like you point out. But the reason is not only COVID, it's also the turnaround of Deutsche Bank.
Another big issue you're going to face that has little to do with COVID is more competition in Frankfurt. There's a lot more money moving out of the UK into Frankfurt. Do you expect other businesses to challenge you at home?
Well, you know, first of all, it's good for Frankfurt, and I'm glad that we see this development. I'm glad that people recognize the criticality, but also the capacity and the capability of the financial center in Germany and in Frankfurt. And of course, that means that we have more competition around. But actually that challenges us and that inspires us to really go our way, to follow our direction. And so far I can say that people like to work for the market leader in Germany, and that's Deutsche Bank.
I would have guessed you embrace the competition. What about Deutsche Bank's plans post-Brexit? I mean, we don't know the details yet, but we know enough that big banks are making big decisions with regards to their balance sheet and their headcount, moving it out of London. How much assets do you want to move back to the continent?
Look, we have a fully functioning booking hub in Frankfurt. We already transferred a material balance sheet actually from London to Frankfurt. We are also now awaiting actually what the final outcome is, and that is what you can expect from us, and you must expect from us, in particular our clients. We are fully prepared for either outcome. I believe that London is so critical and so important as a capital market location that London will always play a critical role, also for Deutsche Bank. But whatever the outcome is, which is for me hard to judge at this point in time and to assess, we are prepared.
I'm sure you are, and for the compliance issues as well. I wonder though, post-Brexit, post-COVID, does compliance costs just continue to rise? Is this an issue for the industry and for Deutsche Bank as well to face?
Well, we have seen obviously a material increase in compliance, AFC, we always call it non-financial risk controls. Rightly so, because we had our weaknesses and deficiencies, there is no doubt. We invested a lot over the last 3 to 4 years. I think we have made a lot of progress. I do think that cost will remain elevated, but now technology is playing more and more an important factor. And I do believe, and that's actually the strategy of Deutsche Bank. That is also one reason why we did the joint venture and the cooperation, not the joint venture, but the cooperation with Google, that we invest heavily in kind of automating our controls, which actually then also reduces manual costs and makes our controls even better. So at the end of the day, I do believe, while even improving further on the controls, that the underlying costs we can reduce because of technology.
And with all of these challenges, you're still on track to hit your targets. Your revenue target in 2022 is still safe.
That's what we aspire, and for the time being, we have outperformed our own targets for the last 15 months. I would be a very bad CEO if I now question my future targets.
Well, thank you very much for spending this time with us. We really appreciate it, Christian Sewing.
Thank you very much.